This video is for people that want to make a lot of money potentially here in the next couple of months. If that is not you, click off this video. Do not watch it. I said enough in the title. I want to get straight into it. Save you guys the long intro. Hit the like button, subscribe to the channel. Go ahead, come join the trading community if you guys want to be a part of the action over there. Let's briefly talk about AMC and then let's get into how you could potentially make a ton of money here in the next couple of months. So AMC is down 3.71% right now. I just want to call this one thing out. We're going to go over the Ortex data briefly, but I want to call out the fact that return shares are only 902.6 thousand. As you guys do know, the return shares fall into that T+2 sediment time. So essentially, it takes 2 days to see an accurate reflection of the return shares for 2 days ago. Well, if you take a look at 2 trading days ago, that was March 22nd. The stock went up 15.13%. So the shorts are indeed not covering. This is not a short squeeze, regardless of what you guys have heard in other videos. I've seen people talk about this move has to be a short squeeze. It's not. The retail community is back and they're flooding into different stocks, and it's like whack-a-mole, right? Certain stocks are gonna pop, certain stocks are not, and then the next round it's gonna be other stocks. That's what's going on. Shorts, they're not covering. A 15% move March 22nd had less than 1 million shorts that were covered, and we've seen millions of shares be shorted every single day. So I think that speaks volumes. Now, as far as a little bit of the news you guys need to know for the day, the most important thing is young Biden is going to be speaking at 3 p.m. about essentially these new sanctions that they are putting on. And you guys can see this headline right here. It says U.S. to sanction over 300 Russian elites and block Russian central bank gold. So that's interesting. I don't think it's really going to move the markets too much, but every time Biden speaks, it tends to drop the markets and then we start to rally after he speaks. That's just the trend that I have personally noticed, and that's really going to be the main catalyst for today. It might be 4 o'clock by the time he does come on, but watch for that instability around the end of the day. That's really all for news. Some NATO headlines that are coming out, some nuclear talks about potential nuclear weapons being used, some headlines like that. Markets are taking it very well, up 1% on the NASDAQ, Russell 2000 up 0.5%. Dow up 0.61% and S&P up almost 1% as well. Now, we need to get into how potentially you guys are going to make a lot of money here in the next couple of months. And that is my passion, helping you guys, one, grow your financial literacy, right? This stuff is not taught in school, and even in college, it's not taught on this kind of level. So that's my real passion here, and to make you guys money. So let's talk about that. And the markets are in a very interesting place. Why do I say that? Well, because we've had a lot of bad news that the markets have taken pretty damn well. You've seen COVID in China break out and going crazy. You're essentially on the verge of World War III, one wrong move, and you're going to be in the next World War. Not good. You've seen the Fed go from, hey, we might raise 3 or 4 times in 2022 within the last 2 or 3 months. Now it's 7 to 9 times with 2 double rate hikes, right? A 0.5% rate hike is considered a double rate hike. The normal is 0.25%. So you've seen a lot of bad news come out, but stocks are actually holding up very well under these circumstances, as well as a recession that is starting over in Europe and likely coming to America as well. So long story short, a lot of bad news has been priced in. So when I sit here and think to myself, what could cause the markets to essentially flash crash or crash in general? I'm talking about go to 350 on the SPY for some kind of reference there. If we pull this out to the SPY, we only ever hit about 410 was the lowest during this crash. So we could go a lot lower, and a lot of stocks are already much lower. So the markets, like I've said for a while now, they are on weak stilts. But considering everything going on, they're doing very well. Now, what is going to cause this? Well, it's going to be a gray swan event or possibly a black swan event, but you don't know what a black swan event is going to be because it's a black swan. It happens out of nowhere and really spooks the markets. But even gray swans can crush the markets, like you've seen with COVID. COVID was a gray swan. And what a gray swan is that there's a potential for it to happen or get bad or cause a lot of volatility in the markets, but you don't expect it to, and then it does. And it's like, wow, I seen that coming, but I didn't trade for it. I didn't recognize that it was going to turn into a big situation. Think about it. We knew about COVID back end of November. In December, the markets didn't crash until March. That was a huge gray swan, probably the best one to call out in history. But we have a lot more potential gray swans that are here in the next couple of months that you guys really need to know. And we're kind of going to go over this as far as a probability rate. So I think probably out of all of the potential gray swans here, China locks down their whole country is probably the most likely. Now, why would that hurt American markets so much? Well, it would hurt American markets because everything, pretty much everything, is connected to China as far as America. Apple has all of their production, or virtually all of their production, over in China, as well as a lot of other companies. So China gets clapped, China locks down, the whole world gets clapped, especially us, because we have strong ties to China. And given the COVID situation that's going on over there, and their no COVID policy, it's very possible that they could do something like we did and just lock down the whole country if that situation does get worse. And I think that's probably the most probable gray swan. It's something the markets know that is a possibility, but it has not happened yet, and the markets are not really pricing that in right now. And that's the thing we should also talk about before we get into the next 4 things here on this gray swan list, is the markets pricing things in. And that's very important because the markets have priced in, like I said, a lot of bad news. So consider this. When the Fed meeting comes on May 4th, the markets are already pricing in with about a 66.1% probability of getting a 0.5% rate hike. So if we get a 0.5% rate hike, the markets might actually rally off of that because it's what we're already expecting. But go back just to the last meeting, we were not expecting a 0.5% rate hike. If we would have gotten that, then the markets would have sold off dramatically. It would have been very bad in the markets. It all comes down to markets pricing things in. And this list, the markets know about them, like I said, but they're not pricing them in. And that's where the opportunity comes in. But at the same time, they're not guaranteed to happen. Like China locking down their whole country, not guaranteed to happen, but I think it's one of the more probable things on this list. The second thing is, with all of this talk about possibly a nuclear attack, if you guys don't follow this whole situation, Russia's basically spokesperson, like Arjen Psaki, but for Russia, they said that Russia could use a nuclear weapon if they feel threatened. They said that yesterday, and they also did say that Ukraine is trying to build some kind of nuclear weapon themselves, and they've been trying to warn the US, Europe, and the world about this for decades, and nobody has been listening, kind of saying, hey, we told you guys that they're doing this, we have no proof about it, but if we feel like that's going to be the case, we're going to use a small nuclear weapon. And that is like a chain reaction, because when they do that, the fallout would go into other countries, and there's a lot of talk, especially with Marco Rubio and a lot of other senators, that hey, that could trigger Article 5 if that radiation goes into NATO countries, which it most definitely would. So that's a really bad situation. If you guys don't follow, what's going on with that, then you're probably a little bit more unaware of why that's on this list, because it's becoming a quite real possibility. Yet again, something the markets are not pricing in. The third thing is going to be a European recession. This looks very likely, but Europe is still seeing some pretty good growth overall. It's really coming down to the energy crisis that is starting to fuel a lot of fears about a recession, and that is kind of priced into the markets, and it wouldn't affect our markets as much. But if Europe goes into a recession, then we are also likely to go into a recession, and that is the fourth thing on the list, a US recession. Now, this is really not priced in anymore since the Fed came out and said, hey, we have a very small or virtually zero chance of going into a recession this year. But a recession is pretty easy to get. It's just 2 consecutive quarters of declining growth. So once you get into this earnings season, once you start to see companies, in my opinion, like Apple, that are unable to put up stellar numbers and beat their 2021 numbers, then that's where you're going to see more fears come out about that, and that's where a lot more opportunities can come in as far as puts and shorting the markets, etc. Now, the fifth thing is going to be something that would devastate the markets, but it's not as likely in my personal opinion. A Fed, say a 1% rate hike or an emergency rate hike, that would clippity clap the markets. Nobody would expect that. That would catch everybody off guard, and there would be a mass panic for the door, for the sell button. Everybody would sell everything. And you'd likely see a flash crash. So these are kind of the gray swan events that I am going to be paying attention to. Gray swan events, again, are events that you could see turning into a bigger situation, but that the markets are really not pricing in. And a black swan are events you can't see that the markets are really not pricing in. And that would be something like a nuclear apocalypse, right? The markets are not pricing that in. It's a virtually, now it's a pretty decent probability, actually, at least a percent or two at this stage, but the market's not pricing that in. That would be the least of our concerns about making a big bag if that were to happen, right? So that's really my thoughts on this. The timeline for this, really the next 3 to 6 months. Now, I also want to give you guys another potential bullish catalyst, which would be a big bullish catalyst that would send the markets rallying, would be some kind of peace agreement, some kind of end of fighting with Russia and Ukraine. It would take a lot of these uncertainties off this list. And if that were to happen, the markets would rally for good reasons. Oil would come down dramatically, and that would ease the risk of recessions in Europe as well as in America, because historically, when oil goes over $100 a barrel, especially to 135 or wherever we're at right now, like 115, you pretty much always see a recession, because that costs a lot of money from people just to do daily activity. So that's a potential big bullish catalyst. The rate it's looking, it doesn't seem as probable that is going to happen. But if that is going to be the outcome, which I personally hope it will be, it looks like it'll take some time. But that is a big potential bullish catalyst that would knock a lot of uncertainty around the things that we have talked about here in this video basically off the list, and that would send the markets rallying to the upside. Now let's get into some specific AMC data. Let's take a look at the option flows, and for today you're looking at positive order value of 49%, 30 orders totaling $13.18 million. Considering AMC is down 3% right now, we were down almost 10% earlier in the trading day. That's a very good sign that we are pretty much neutral as far as option order flows. Keep in mind, yesterday we had 86 orders totaling $59.96 million, positive order value of about 90%. This does indicate to me that we're likely to go much higher, and like I said, shorts are not covering. Return shares, and this was obviously for 2 days ago, at less than 1 million, at 982.7 thousand each and every single day. We have had millions of shares that were borrowed over the past couple of days. So by and large, it looks like the short interest has actually increased, and that is the estimate that we are getting, now sitting at 21.1%. Short interest. Shares that are sold short of 108.72 million, cost of borrow max of 5.1%, share utilization of 100%, and days to cover at 2.87. So not too much has actually changed here, but it does look like the short interest has actually went up just a little bit. Now, as far as market moving catalyst and the max pain is $18 per share by tomorrow. Would indicate a move downwards, but I don't necessarily think that is going to happen. As far as the catalyst for today, we did have Fed speakers, but the main thing is going to be, and we did have a good durable goods orders report, so that was good. Initial jobless claims, all of this came out pretty good, and that's probably contributing to this green day that we are seeing right now. Fed speakers, nothing too crazy was announced that we have not already heard before, so markets did not sell off on any of that. But the markets might sell off when Biden is about to speak around 3 p.m. The markets tend to rally after Biden speaks, so if you guys want to trade that, that is definitely up to you guys. That's just, like I said, the trend that I have noticed. As far as tomorrow, you do have pending home sales, Michigan consumer sentiment for March, and that's very important. It's highlighted in black right here because the markets move off of Michigan consumer sentiment. It's one of the longest running, most accurate surveys there is, and it definitely gives investors a good gauge of where things currently sit with the consumers. You also do have a lot of Fed speakers, Fed Williams, Fed Barkin, Fed Waller, and that's pretty much it. Canada Fed speaker as well. Those can move the markets, but not all too much. So that's really going to be all for this video. Watch to see if we hold above 1850 by the end of the day today. If we go bullish or positive by the end of the day, which it looks like we might, we're only down about 2.20% right now. That's going to be a huge sign. Overall, it looks like a consolidation day, and it looks like we are likely to take that next move higher, possibly tomorrow, if not for next week, because after all, shorts have to cover, and they have not been covering. So forget what you guys heard from other videos. This has not been a short squeeze. Even back here, this was not, by and large, a short squeeze. You only seen about 6% of the short interest ever be covered during that rally. So put that into context with what we could potentially see. And I think it's pretty naive and pretty, just shows some people are very uneducated when it comes down to the markets to call this a short squeeze. Not the case. So thank you guys for watching. Hit the like button, subscribe to the channel, come join the trading community down below in the pinned comment. Get yourself those free stocks. Like I said, thank you for watching, and I'll see you in the next one.